One of the most common mistakes beginners make is choosing a trading style based on results instead of compatibility. They ask which style makes more money, which one is faster, which one looks more exciting. But trading styles are not ranked by profit. They are defined by time, pressure, and behavior. And choosing the wrong style often causes failure before strategy even matters. Welcome to the Phantom Trader world, where clarity comes before execution. Day trading, swing trading, and investing are not just different techniques. They are different ways of interacting with uncertainty. Understanding the difference between them is not about preference. It is about alignment. Day trading is built around short time frames. Trades are opened and closed within the same day. Decisions are frequent, and attention is constant. This style demands presence. Screens are watched closely. Opportunities appear and disappear quickly. Because decisions are fast, emotional regulation becomes critical. Small mistakes happen more often. Overtrading becomes a real risk. Day trading is not about prediction. It is about execution under pressure. For some people, this environment creates focus. For others, it creates stress. If you struggle with fast decisions or emotional swings, day trading will amplify those weaknesses. Swing trading operates on longer time frames. Trades may last days or weeks. The focus shifts from constant action to structured patience. Decisions are fewer, but commitment is deeper. You must tolerate price fluctuations without constant intervention. This style reduces noise, but it introduces a different challenge. Waiting through pullbacks, waiting through uncertainty, trusting the process when nothing happens. Swing trading fits traders who prefer planning over reaction. It rewards discipline and consistency more than speed. But for traders who need constant feedback, swing trading can feel uncomfortable. Holding positions overnight or through volatility can create anxiety. Investing works on the longest time horizon. Positions may be held for months or years. The focus is not short-term price movement, but long-term value and growth. Decisions are slower. Activity is minimal. Investing rewards patience more than precision. This style requires emotional stability. Short-term fluctuations must be ignored. Noise becomes irrelevant. For many people, investing feels calmer, but it also demands restraint. The challenge is not when markets move slowly. It is when markets move against you for extended periods. Investing tests conviction more than timing. The mistake many beginners make is mixing these styles without realizing it. They invest emotionally, but trade technically. They day trade with long-term expectations. They swing trade while checking charts every minute. This confusion creates frustration. Each style has its own rhythm, its own pressure, its own psychological cost. Day trading costs attention. Swing trading costs patience. Investing costs time. None of these costs are better than the others. They are simply different. Another overlooked factor is lifestyle. Day trading often requires fixed hours and high screen time. Swing trading allows more flexibility, but requires discipline away from the screen. Investing demands the ability to wait without interference. If your lifestyle conflicts with your trading style, consistency becomes impossible. Markets do not care about your schedule, but your behavior does. Choosing a style is not about ambition. It is about sustainability. A trader who forces themselves into a style they cannot maintain will eventually break rules, and broken rules destroy any edge. Professional traders do not chase styles. They commit to structures they can repeat. They choose the environment where discipline is easiest, not hardest. This is why copying someone else's approach often fails. You copy the outcome, not the conditions that produced it. Before choosing between day trading, swing trading, or investing, the most important question is not, which is better? It is, which one can I execute consistently without burning out? Because in trading, survival always comes before optimization. If this video added clarity to how you see trading, support this work. An interaction tells the algorithm this foundation matters. A subscription tells me to keep building it with you.